Okay, hey everybody, Dan here on Wacky Wednesday. Just want to look at Netflix today. As you know, if you trade anyway, if you just happen to be on this video by mistake, you may not know this, but Netflix absolutely took it in the butt. There's no other way to say it. It was essentially prison raped. And the stock's down like 36%. It opened down, not that much. I think about 27, something like that. I guess maybe a little bit more according to my cursor, but we'll just say it opened close to 250. And typically on something like this, you kind of look for a snapback, and here's why I actually posted it on the cesspool line, otherwise known as Twitter, that it was right at a point where you'd expect a rebound, and I'll tell you why. Because it is here, excuse me. Here's 3 standard deviations. These Bollinger Bands. Stock's not supposed to trade 3 standard deviations one way or another. It's kind of like it's breaking the law. Now, these days, you're not going to get arrested for this. Nobody gets arrested for anything. So maybe it's okay that this is going to continue to trade lower, but I'm just telling you, at some point, this is setting up for a pretty decent rally. But as somebody mentioned in the forum today, this is not looking, it was kind of a combination thing. I mentioned that this is not looking like Coupa. When Coupa it fell down again below this 3rd standard deviation, I bought it very close to the bottom. Awesome entry, crappy sell. I sold it, I would say a little bit too early. But what I'm saying is, though, this stock fell down and then just started recovering, really nicely. On the other hand, Faceplant here did not. Facebook here fell, and it just kept on going. Personally, I don't even think it's done going down, but we'll see. The point, though, is like Coupa fell down, 3rd standard deviation, and then started moving up. Facebook fell down and just kept falling after just more and more selling. And so we could certainly see that with Netflix, but my approach has not changed. And the reason is because my approach does not involve predicting or forecasting. My approach involves watching. And so what you want to watch for, and this may not be your trade at all, but what you want to watch for is evidence that the selling is done, not because you think it's done, not because you translate and interpret what I'm saying as, I think it's done. Not at all. If you see the selling end, and I'll tell you how you can know that in a second, if you see that it's ended, then you can put yourself in a position to at least ride it northward a little bit. How much is it going to go? I don't know. If Meghan and Harry Markle were to come out tomorrow and say that they are, in fact, going to earn I think they got 20 million or something. I don't know. After a while, it doesn't even matter, does it? But they're going to earn that money and actually do some kind of show or something that shows real value to Netflix, then, hey, man, we could see this stock run up like that. However, since pigs could fly out of my butt playing violins as a more likely scenario than those two doing any work for Netflix, I kind of don't think that's going to happen. Instead, my bet is, I'm not really betting, but my bet is that the stock's going to slowly kind of stabilize. I think after this much selling, and it just kept going, you kind of have to think that there's going to be some overhead supply here. There's going to be, in this area, or it's just kind of in this area, there's going to be traders that, held on and we're hoping for a bounce, and then it didn't come, and so by this time they're going, crap, I can't sell now, I'm selling at the bottom. I can't sell now, I'm selling at the bottom. Definitely can't sell now, I'm selling at the bottom. And then if the stock ultimately comes up here, they're going to go, okay, crap, now I'm selling. And so I think you're going to see that kind of overhead supply. But what you look for is pretty simple. I think you look, don't try to catch the exact bottom. I think you look for a breakout above 245. That was today's open. If you see the stock start to break out above 245, then you should be able to get a pretty nice run, for 5 or 6%, maybe more. But that's all I'd really look for on this. Now, you could say, well, that's right now the stock's, trading down here. And you're gonna tell me I need to wait 21 points before I buy the stock? No, I'm just telling you that this is one way to look at buying the stock. You could go, VWAP crazy and just wait for the stock to start trading above the volume weighted average price line. I'll put it here. It's a little more doable. Anyway, you just wait for the stock to start trading above there and then buy it. But that's kind of more of a day trade. I'm just talking about a swing trade where you're catching the stock as it kind of washes out all of the sellers. It's like a bear puke fest. And then at that point, the stock will start to run higher. So could happen tomorrow, but it could happen next week. I just know that ultimately it will happen. And of that, I am certain. When it happens, I ain't putting myself out on the line like that. All right? I will see you next time, members. We've got a live training session tomorrow, a special live training session Thursday. If you're not a member, join. So then you can check out the training session too. Okay? They're always fun. They're always longer than I would like, but always shorter than they could be.